Are you positive that we'll avoid a no-deal Brexit?
I am watching with great interest, and it's really impossible to call. I agree with you. There's a lot going on beneath the surface, but whether it's positive or negative, you just cannot tell. The Europeans have red-circled their position, which is that the deal is the deal and it's not going to change, but they're listening apparently to what Prime Minister Johnson has to say. But then we don't see Prime Minister Johnson submitting the written kind of proposals and the concrete kind of ideas that the European Union says it needs in order to consider a deal. So you step back and you look at the big picture, and it's gone nowhere and it's going nowhere. But again, we don't know what's going on beneath the surface.
You know, this is killing me because I have been saving up for this used Ducati S4 RS in Sheffield. I almost pounced when the euro was trading for 93 pence, and now it's back down to 88, and I'm not sure if I'll be able to afford it. Why is the euro so weak, Carl, against the pound, even against the dollar? Is the euro area due to lose out big if there's a hard Brexit as well?
Well, you know, first of all, it's just a matter of simple finance. You know, we have yields in the United States, 10 years, 2%, and yields on the 10-year Bund, I don't even know where we are this morning, minus 0.5% or so. That's a pretty wide spread, and it's got to get your attention if you're an investor. And even if you cover with the currency risk, you're still coming out ahead by being in the U.S. rather than in Europe. So to my mind, this is, you know, the driving force right now. Normally, yield spreads are interesting, but not dominant in currencies. But right now, the U.S. is a magnet for money, and our stock market also is performing well. Europe stocks are doing meh, you know, kind of okay. So I think that the U.S. is the magnet right now.
The pound could slump to parity on a hard Brexit, BNY Mellon has said today. I mean, we've heard these calls before, but they're saying it could tumble to parity with both the dollar and the euro. Is that something you foresee as well, Carl?
Well, you know, that's a good guess. All right. I think everyone agrees that sterling will be a lot weaker if we go to a hard Brexit. You know, how much weaker than it is right now, that's hard to tell because we have a lot of information already priced into the markets. I mean, it's no surprise to everybody that October 31st is the deadline, and we look at the calendar and we see that we're 5 weeks away, and that's not a lot of time. So there's a lot of information already in the markets already. I do think there is downside to sterling, and I've always been worried about sterling's current account deficit, which is atrocious. And now if you have Brexit uncertainty, if people aren't willing to finance that, then I think sterling is particularly vulnerable to the downside, both for Brexit and for non-Brexit reasons. And the combination of the two could be a big push.